Hi everyone, thank you for joining. I think we have few more people joining in and the session will start on the scheduled time of 3 p.m. Thank you. Hi Vikas,
Hello, Anushka. How are you?
good, how are you?
I'm good. Good. I thought of joining a few
Yes,
minutes
yes.
early.
No, that's great. Actually, a lot of people are joining in right now. So we'll
I
let
see.
everyone
Okay.
join in till 3 and then we can
Perfect.
start.
Sure.
Yeah.
Sure.
Hi Arun.
Did
Yeah, can you hear me?
this?
Yes, we can hear
Yeah.
you.
Yeah, okay, thank you.
So we have a few more people joining in. I think we can wait for another minute and then start.
Yeah, sure. So, who are expected to join, if I may know?
So it is to all industry folks from regulated entities across the SEBI and RBI ecosystem.
Okay, sure. Okay, thank you.
I think we have a lot of people joining in, but we can start the session. Good afternoon, everyone, and welcome to today's knowledge session on the Reserve Bank of India Unique Identifiers in Financial Markets Master Directions 2026, focusing on implications for the securities market ecosystem. This session is being jointly organized by the Payments Council of India and the Fintech Convergence Council. The RBI's master directions introduced a harmonized framework for the use of unique identifiers in financial markets with the objective of enhancing transparency, improving risk management, and strengthening regulatory oversight and promoting greater interoperability across market infrastructure. As the adoption of identifiers such as the LEI becomes increasingly integral to financial transactions and reporting, it is important for market participants to understand both the regulatory expectations and the operational implications of this framework for the securities market ecosystem. To help us unpack these developments, we are joined by two distinguished speakers today. Mr. Vikas Panwar, Country Business Manager India at the Global Legal Entity Identifier Foundation, or GLEIF, is leading efforts to advance the adoption of LEIs and strengthen financial transparency across India. He brings valuable insights into market development, stakeholder engagement, and the evolving role of global identification standards in financial markets. Joining him is Mr. Arun Kumar Pandey, Executive Vice President and Head of Derivatives at the Clearing Corporation of India Limited, or CCIL, who brings over 3 decades of experience across bonds, derivatives, foreign exchange, repo, and funding markets. In his current role, he oversees key market infrastructure functions, including derivative platforms, trade repository operations, and the local operating unit for LEI issuance, while also contributing deep expertise in risk management and regulatory compliance. We look forward to an insightful session by our speakers today, sir. Over to you.
So, very good afternoon, everyone. Thank you very much, Anushka, for setting up a very beautiful context, I'll say, and thank you for the introduction. So I think I'll skip my introduction now. So I would also probably, before I start the session, I would also like to thank FCC and PCI for giving us this opportunity to discuss on this important RBI Master Direction 2026. Before we initiate, I'll probably give you what exactly we're going to cover in the session today. So our discussion will probably revolve around the points and the specific things which are mentioned in the Master Direction 2026. If you look at the directions, it is divided into two sections. The section A of the direction is talking about LEI, which is the Legal Entity Identifier. And section B of the direction is talking about the UTI, Unique Transaction Identifier. I'll cover the first section, and we already have with us Mr. Pandey, who is here to cover and talk more on the topic around UTI and the applications. So we'll begin with LEI, which primarily I think many of you are already aware, because there are already a lot of mandates around it when it comes to financial market, and it's not only this year that this mandate has come from RBI. There has been several mandates in the past as well. Can you please flip to the next slide? Yeah. So before we discuss the identifier themselves, it is, I think, useful to also understand the governance framework behind them. Although it is not part of this master direction, but I think would be useful to also understand what exactly is the underlying governance framework which both the identifiers actually follows. So Regulatory Oversight Committee, the ROC, was constituted after the Lehman Brothers collapse in 2013. And it is actually acting as an international governance body, IGB, when it was initially constituted under the G20 leadership and within the FSB. The primary agenda was to support the implementation of LEI, which is a unique identifier across the financial market, to support the implementation not only in one jurisdiction but across the globe. So that was the primary reason this committee was constituted. This committee comprised of more than 65 plus financial market regulators and public authorities across the globe, from which is probably more than 50 countries are part of it. So it is an international body which is not only specific to a single I'll say jurisdiction, but it is actually caters to multiple jurisdictions to support the international implementation in a standardized way. So the broader function of ROC is to promote data standardization and interoperability, support aggregation of risk data across jurisdiction, enhance transparency in global financial market, and facilitate regulatory reporting and systemic risk monitoring. It is the governance arm probably for the arrangement of global identifiers. Although, like I said, the initial, when it was conceptualized and formulated, the primary objective was to support the LEI implementation, but eventually it also brought a lot of other responsibilities under its umbrella. And it was also spelled out in the UTI governance framework issued by FSB in 2017. And also the initial ROC charter was also then amended to bring many more identifiers into the framework. So we will only stick to two identifiers here, LEI and UTI, because these are mainly being covered in the master directives, although there are many other identifiers for which the regulatory oversight committee is also responsible in terms of governance, which includes the UPI and the ISN, which is managed by ANNA. Can you please go to the next slide? Yeah. So, so while market participants generate and report these identifiers to various state repositories, banks, and they collect them and also further report, the overcharging governance and the standard setting responsibility sits with the ROC. Now, I'll probably, before looking at the operational requirement, I think it is also useful to also understand the context behind it. What exactly is the RBI's policy statement? So if you look at the master direction, the RBI policy statement here says that identifiers such as the LEI and UTI are the key global standards for promoting transparency in financial markets. And if you look at the regulatory intent here, the master direction is always a consolidation of all previous RBI circulars. So here it is a consolidation of all previous RBI circulars with respect to LEI implementation and the mandates which are probably linked to OTC derivatives. Now, what is an LEI? So I'm not going to give you a lot of probably a detailed lecture on the LEI here, but just to stick to what is mentioned in the master direction, it is a 20-digit, 20-character unique identification code, which is assigned to entities participating in the national market. It is a 20-digit alphanumeric code, I'll say. It is also ISO standard, ISO 17442. It is intended to improve the quality and accuracy of financial data and systems. It supports better risk management and the market transparency. So if you go, look at the effective date, it is immediate from the date of issuance of this direction, which is 27th March 2026. Although most of the directions which are related to OTC and LEI are already in force, so there is no room and requirement to probably extend the deadline. So it is quite logical to make the effect date as effective from the same date of issuance. Yeah, next slide, please. Next slide, please. Yes. So now, if you look at this slide, this I think we are going to now talk more on the applicability or the scope of LEI. So, which all are the organizations which comes under the ambit of or the scope of this this master direction? So, it is mandatory for all non-individual entities which are undertaking OTC transactions in the RBI regulated market segments. So, when I say non-individual, it includes all kind of market participants which are non-individual, or it means anyone which is even a sole proprietor or a partnership firm. Definitely LLP and the corporate structure is definitely being included in the scope, but even all other kind of nature of entities are also eligible and under the mandate. So any market participant which is undertaking any OTC transaction in RBI regulated market segments. So it is very categorically mentioned that it is applicable only to the RBI regulated market and not to the other markets which are regulated by maybe let's say SEBI, or any transaction which is happening in the stock exchange mechanism. So anyone participating in RBI regulated market which covers the GSEC market, money market instruments, and foreign exchange instruments, for non-derivative foreign exchange transactions, which primarily includes the spot market transaction, which is settled within the T20 to T+2 framework. It is the LEI is required only where the transaction is amounting to USD 1 million equivalent in other currencies. So it should be less than or equivalent to 1 million, which is approximately, if you look at current value of INR, 9.5 CR to 10 CRs approximately. It covers resident entities, non-resident entities, financial institutions, corporates, and other eligible market participants. So this is the applicability of the mandate when it comes to LEI. Yeah. Please, next slide, please. Yeah. So now we have understood, I think, which kind of entities are under the ambit. So now the next important question comes is the issuance mechanism, where to actually get or obtain LEI from, and what is the actual process, or probably the right way to maintain an LEI. So this single slide talks about these two aspects. So for all market participants, it has to be, LEI has to be obtained from all from any LOU or local operating unit, which is the actual issuer of an LEI, which is accredited by GLEIF. So GLEIF is the organization which I represent, and it's also being constituted by the FSB under the ROC, which is a kind of operational arm to execute the LEI implementation across the globe. So the issuer has to be a GLEIF accredited, but when it comes to India, any Indian local operating unit must be recognized by RBI under the PSS Act 2007. So any LEI issuer which is domiciled out of India, it has to be also recognized by RBI. The GLEIF accreditation alone will not suffice. It has to also be recognized by RBI under the PSS Act. Now, if you have to talk about the LEI status or the maintenance of LEI, it has been very categorically mentioned in the directives that the LEI must remain valid and current in the global LEI system. Lapsed LEIs are not acceptable. So the underlying objective behind mentioning these two things is that the data quality of LEI depends on the renewal cycle and the probably and the correct data elements. So it has to be valid. So whenever you are reporting an LEI or an entity is reporting an LEI to a market participant, market intermediary, it has to ensure that the LEI is not lapsed or the LEI is renewed before the expiry date. So in order to support the data quality aspect, we have also recently brought a new category, I'll say, which is called the policy conformity flag, which is a kind of a filter which will easily tell institute that whether the LEI is current and also the level 2 reporting is done. So when I say level 2 reporting, because LEI has multiple layers within it, because LEI is not just a ISO standard, an attribute, but it also brings a lot of data along with it. So LEI brings level 1 information, which tells who is who, and level 2 information, which says who owns whom. So anyone which has a policy conformity flag checked, it means that LEI is current, is valid, and also the level 2 reporting is done for that LEI. So it is also one parallel way to look at the data quality when it comes to reporting or adhering to the circular. It is applicable to all entities, which is all market infrastructure institutions which are engaging in any kind of execution, reporting, depository function. So all are advised and prescribed to must capture and maintain LEI information of transacting participants. Entities without a valid LEI shall not be permitted to undertake transactions under these restrictions. So Indirectly or directly, it means no LEI, no trade in OTC. So that's all from my side. I'll now pass it on to Mr. Pandey for his session. Thank you.
Yeah, thank you, Vikas, and thank you, Anushka, for introducing me. So, to take it forward, so what is then CCIL? Because Vikas has mentioned that an LEI has to be issued by an entity which is accredited by GLEIF, as well as it is approved by the local regulator, which is Reserve Bank of India. So LEIL, which is a wholly owned subsidiary of CCIL, is a local operating unit which is authorized by Reserve Bank of India under Payment and Settlement System Act, as well as GLEIF. And we are operating in India since 2014. So far, we have issued more than around 1.5 lakh LEIs to Indian entities. So we are a completely Indian entity, and we are helping all the Indian entities to obtain LEI through various channels, various modes we are enabling, so that the ease of obtaining LEI or managing LEI becomes very easy. So that has been our objective. And I'm sure most of you would be knowing only, but just to give you a context why LEI is so critical. So we are living in a digital world where cross-border transactions are happening, where a lot of transactions which happen across the borders. So how do you identify with whom, which counterparty you are dealing with? So it's very important that you understand with whom you are dealing. And LEI is a kind of, it's a kind of passport. We go to different countries. I mean, how do other countries recognize us? So it's like a passport which is globally unique, and I mean, that can be used across the financial transactions. So that has been the use, and it all started with that financial crisis where nobody knew what was the exposure of different counterparties across the group, etc. So this globally unique identifier was created, which is expected to serve the purpose of clearly identifying the counterparties behind the trades. So that is the objective. And so why LEI? I mean, again, this question is always asked. There are so many identifiers in India. Why then again a new identifier which is pushed through? But this identifier is unique in two sense. I mean, that all of us we should appreciate. First, it is globally unique. So one entity cannot have two identifiers. So it has to be the system checks. All those are so much robust, which is run by GLEIF, that an entity cannot have two identification. So in India, I am a company. I am identified by a SIN, by PAN, my other GST number, etc. So many things. But globally, if I have to operate, there is one number which identifies me clearly. It also contains two important information: direct and ultimate parent. So this direct and ultimate parent, what it does is that, suppose if you want to create the group structure, it becomes very easy because you have the child node, and you have direct parent and ultimate parent. In a scheme of things, everything can be aggregated together to create a group. That makes it very, very powerful. Plus the data, as Vikas mentioned, it has to be renewed every year, at least mandatorily it has to be renewed. So it's current. So it's not that data which is captured and which the entities, I mean, all of us know that the data associated, the data issue associated with all other identifiers. So this is why this is very, very unique. And that is why regulators across the globe, they are insisting on it. So in India, we have been operating, and we have been working since 2014. So this is our, a small background I thought I'll just give before I move on to UTI. So moving on to UTI, again, before I formally dwell into the topic, again, it's a genesis of financial crisis. When financial crisis happened in 2007-8, the exposure of the derivative transactions were so huge and so opaque that nobody knew who is doing what kind of systemic risk the whole ecosystem is creating, and why all of us should bother about the financial health of a country because of that whole ecosystem, because all of us get impacted, right? Today, today in the war which is happening, all of us have been impacted due to so many things: oil prices, inflation, everything. So it's in the interest that this financial ecosystem works in a seamless manner, in a very risk managed manner. So what happened when that financial crisis happened, and a lot of trade default swaps, a lot of other very structured derivatives were traded, and it resulted into a lot of losses across the globe. So it was identified by the global regulators, that FSB, Financial Stability Board, that there is no single place where somebody can know that, okay, what kind of trades which are happening. So especially OTC derivative transactions, which were considered as very opaque. So there was no central place. All of it was having at several places, but there is no central place where regulator can easily access those information and do some analysis to find out the systemic risk. So then, from then onwards, that the genesis of trade repository, where all the OTC derivative transactions need to be reported at one place. It's an electronic record where everything is reported by the market participants, and it gets aggregated. A regulator has access to it, and they can run all their systemic risk calculations to understand where all that systemic risk is probably emerging or going to happen, so that they can take corrective action. So CCIL, Clearing Corporation of India, although we are our primary business is we are a QCCP, Qualified Central Counterparty, clearing government securities, money market transactions, forex, and derivative transactions. But trade repository, we also operate trade repository. So CCIL is the only entity which is managing the OTC derivative transactions trade repository, where all OTC derivative trades are required to be reported by the market participants. So this is how, this UTI is very closely linked to TR. So that is why I thought I'll just give you a small background. And again, thanks to the credit of to the vision of RBI. So financial crisis and then TR happened sometime 2012 onwards globally. But RBI from 2007 onwards, they asked CCIL to operate a trade repository for interest rate swaps. So I've been doing since 2007, and I was not there, but I am told that at that time, 2007-8, that financial crisis, that TR, which was operated by CCIL, it proved very handy to the Reserve Bank of India to find out the systemic risk or group exposure or which entities are doing what. So that is some background about our trade repository. Now coming to UTI. What is UTI? It's a Unique Transaction Identifier. So what happens is that globally there are many TRs which are operated, and across all jurisdictions there is some form or the other trade repository which is operating. So in Europe, in US, in Asia Pacific, Singapore, Hong Kong, Tokyo, and everywhere you find it, there is a trade repository. And banks and financial institutions, they are required to report all their OTC derivative trades. So what was happening is that in a jurisdiction like, say, Europe, or suppose for any other place, where there are two or more trade repositories. So one counterparty, there are two counterparties to a trade, right? There is one buyer, one would be seller. So one can report to a different trade repository, other can report to a different trade repository. So the aggregation of the data at the regulator was becoming a challenge. So nobody was really knowing, okay, who are the counterparties to this trade. So it was resulting into, a lot of duplication, a lot of double counting, or maybe omission of the trades. So, and we know, what as I have explained, that these TR, the trades which are reported to TR form a basis of, assessing the systemic risk out of it. So if the regulator is not having access to the complete and clean data where each trade is mapped to a unique counterparties, so it was becoming very difficult. So globally, this initiative was started. FSB has started this thing, that the key data elements which are behind the trade repository which are reported, it should be uniquely identified. So trade being a very first or the granular component of the trade of the reporting. So they started with Unique Transaction Identifier. So every transaction, suppose if it is reported and two counterparties are there, So anywhere if it is reported, it has to be unique. That means suppose in India, say for example, a rupee interest rate swap has been traded between two counterparties, A and B. So the trade should be identified with one single identifier, so that anywhere if it is reported and the regulator is trying to aggregate that information or find out the aggregate exposure of that kind of trades, they should be able to easily do it with a single identifier. So that was the genesis of it. So UTI is again a unique transaction identifier. There are several other identifiers which are planned, which Vikas has mentioned, but we will focus on UTI because that is what is the subject matter of today's discussion and what has been issued by Reserve Bank of India as a direction. So it enables, as I mentioned, it enables regulator to obtain comprehensive view of OTC derivative transaction, one identifier, and this will be tracked across the life cycle. So what do I mean by life cycle? Means suppose a trade has been reported, but after suppose 100 million trade forex forward trade has been reported, but now out of that 20 million has been utilized, so 80 million remains, right? So the exposure is now 80 million only. So then amendment trade or partial utilization kind of thing is reported. So till that trade meets its maturity or its closure, everything what is happening on that trade is called the life cycle, and entire life cycle is maintained at the trade repository. So the trade will be identified with that thing, so that if the regulator wants to understand what has happened to the trade, what kind of changes have happened to the trade, that also can be tracked. Yeah, Anushka, if you can please move to next one. So what is the scope of this UTI? So UTI applies to all OTC derivative transactions. So all OTC derivative transactions, this is very important thing because sometimes confusion happens. In India, in TR, even cash term spot is required to be reported, but they are not covered under UTI directions. So only OTC derivative transactions. So what are those transactions? Forex derivative. So forex derivative means your forex forward, your forex options, etc. So they are covered under RBI master directions. Then rupee interest rate derivatives. So rupee interest rate derivatives, your all INR, IRS, even FCYRS, everything, whatever derivative transactions are there. Forward contracts in government security. RBI has recently issued a new direction where now banks or market players, users, they can trade on the government securities at a forward date. So a forward bond forward, they are calling bond forward. It's commonly known as. So that also those trades will be covered. Trade derivatives means trade default swap. So CDS in India, it's not traded much. Very few trades are there. But as and when it is traded, so those trades will also be required to have a UTI. And they have made provisions that any future new product, if it comes, or any other kind of things which it comes, RBI can notify that those trades will also require a UTI. So this is in nutshell the scope of the application. It will come into effect from 1st of January 2027. That is what is mentioned in the RBI directions. Yeah. Anushka, yeah, if next slide, please. So how UTI is built, again, as we are discussing, that it has to be globally unique. Because there can be a case where the same trade can be aggregated by even the global regulators also. Suppose a foreign bank operating in India, their exposure, their regulator want to see. So that can also should be identified uniquely. So CPMI ASCO, which is a technical committee, which is a committee which works on the security space, they have come out with the technical guidance, so that all the different jurisdiction, they adopt the similar structure, so that it should not have that India is generating UTI but with a different kind of structure, US is generating with a different kind of structure, and so on and so forth. So it should be unique. The structure is unique. That is what they have prescribed, and it depends upon the local regulator. They can tweak it slightly how it is implemented for what products. But the structure CPMI ASCO has given in 2017. It has been implemented in most of the jurisdiction. India, we are implementing it now, and it will be implemented by CCIL in CCIL TR. So it's a 52 character information number. So this 52 character, it starts with the LEI of the entity which is generating that UTI. So suppose CCIL is generating this UTI number, so it will start, all the UTIs will start with the 20-digit LEI of that entity, in this case CCIL. Suppose State Bank of India is generating, it will start with the LEI of State Bank of India. So that is the first component. Then the unique identifier, then all other numbers it has to be placed so that the transaction number becomes unique, so it cannot be duplicated. So that is what the algorithm which generates this UTI number has to ensure, and that is what we are also building our system, so that from 1st of January 2027 this becomes effective. So UTI is generated and reported for all OTC derivative transactions. It is stored in trade repository. So along with the trade information, the primary economic parameters of the trade, this UTI number is also stored, will be stored from 1st of January, and then it can be used by the regulator for their analysis purpose. So now this is also a unique thing, because several counterparties which are involved in a transaction. So if suppose in India, what are the scenarios if we just try to understand? So one could be two entities are domestic. So State Bank of India versus ICICI Bank. One could be one entity is domestic, one entity is a foreign entity. So State Bank of India dealing with Citibank. Third case could be and foreign entity, because now some of the foreign entities they are also required to report. They are trading with, say, outside India, with an offshore entity. So all kind of combinations are there where the trades are reported to CCIL TR, and all of them could have potentially a different timelines to report. That means suppose a trade which is happening in Tokyo, suppose. So if that it has to be minute. So that means when the trade is reported to CCIL TR, which opens much later, so at that time that UTI should be there. So that is why RBI has, and the global regulations also say, RBI regulations also have specifically given a waterfall mechanism whereby that who can generate this UTI number. So this is very critical, because we have to ensure that that trade is having one single number. So that is why this waterfall, in the next slide I'll explain how and what is mentioned in the RBI directions. But ultimately we are implementing that one. And a very neat provision which has been made, part of the whole structure only, that if somebody reports a trade without a UTI number, CCIL TR will generate that one. So no need to bother, we will generate that one, so that any trade is not there in TR without a UTI number. So that makes it the whole transaction very complete kind of thing, and easy for the market also, so that they are not bothered for the immediate compliance. Yeah, next slide please, Anushka. So the next part is the waterfall structure. So there are two kind of in the RBI directions, they have clearly and very beautifully they have bifurcated into two parts. One is the trades which are reportable in India. That means both the counterparties are present in India. They are onshore. So there, the waterfall is CCP. CCP means an entity which interposes between two counterparties, so that it becomes buyer to a seller or a seller to a buyer. In simple terms, if I say if a trade is between A and B, it's a bilateral trade. It comes to a CCP. CCP from that point onwards, after collecting margin, it takes over it guarantees the trade for its entire life cycle. So a forex forward trade, if it happens between A and B, till it reaches CCIL and they are availing the CCP services, it's a bilateral trade. The counterparties are A and B. But as soon as CCP interposes in between, CCIL takes it, then it becomes A versus CCIL and CCIL versus B. So CCIL becomes the counterparty. So if such trades are there. In India, we are for forex forward, for rupee interest rate derivative transactions, for FX options. So in such transactions, if CCP is a counterparty, then CCP has to generate. It can be any CCP. Suppose LCH is a CCP or SGX is a CCP. Anyone, if a trade is happening and it is cleared by a CCP, CCP has to generate. ETP, that means electronic trading platform. If the trades are happening on the electronic trading platform, say Asteroid is a trading platform, our FX Clear is a trading platform on which FX is traded. So that ETP will generate that one. So if it is not happening, if it is by, suppose trades are happening on a voice mode, that is also one of the common mode. So here the entities have to agree that who will generate that one. So one of the counterparty will take on that responsibility. Other counterparty, so that can be reported to TR. And if everything is not there, nobody generates, CCIL TR will generate. So that is one neat structure which is there. But if it comes to the complication comes, so in India, both the counterparties are here very simple. I mean, there's no very, very easy to operate. But if one of the counterparties are outside, suppose X bank in India deals with the Y bank, which is an offshore bank. So there, because of the different timelines, there are some complications. So there also the provisions of the waterfall are very similar. CCP, if it is a counterparty to the transaction, suppose if a trade is happening at LCH, cleared by LCH, London, they issue the UTI. Then clearing member. So an entity is not a direct member of a CCP. It is going through a different clearing member. That responsibility of issuing. If it is electronic trading platform, then ETP they have to issue, or then a foreign jurisdiction with a sooner reporting timeline. So suppose if it is trade between London, counterparty in London versus counterparty in Tokyo, Tokyo has earlier reporting timeline, they will generate. Otherwise, they have to mutually agree. If nothing else, CCIL TR. So it's a waterfall. If one fails, then next, then next, then next. So ultimately, in no case, the trade should be there without that UTI number. That is the ultimate objective. So that's how it will be achieved. And we have been we are in the process of building that system, and it will be live by 1st of January 2027. Yeah, next please, Anushka. Anushka, if you hello, can you hear me, Anushka? You are on mute. You are on mute.
I'm sorry, there's some glitch with my system. If you just give me 1 minute. Yeah, it should work now.
Okay, yeah.
Thank you. Sorry about that.
Yes. So no problem. So yeah, so coming to this part, timing and life cycle rules. So reporting deadlines. So any OTC derivative transactions, if it is undertaken in India, RBI has prescribed timelines by which it has to be reported to TR. So in most of the cases, it is 30 minutes within which they have to report. Some different for forex forward, it is different. For others, it is different. But if it is a foreign jurisdiction trade where one of the counterparty is outside, there the timeline could be different, and so the entity may or may not be able to obtain. So they have given some relaxation there. So RBI has mentioned in their direction that if they are not able to obtain at that time, they still need to report it to CCIL TR, and CCIL will generate it, because if it is blank, CCIL TR will generate that one. But when they get that UTI from their counterparties, maybe tomorrow, day after tomorrow, they have to report and update in the TR. So, but that has to be within 5 Mumbai business days of the transaction. That is what is the reporting deadline. If till the time UTI is not there, an interim UTI will be generated, so that at any point in time, the trade does not remain without an UTI number. So as you mentioned, through the entire life cycle, the transaction UTI number will remain same. The purpose of this thing is that to track what are the life cycle events which have happened on that particular trade, so that it's easy to trace it back. Suppose 100 million, then 80 million, then 50 million, how the whole life cycle has changed, whether some other parameters have changed or not. All those things that can easily be tracked for exposure calculation by the regulator. So that is why amendments or those kind of life cycle events does not undergo a change in UTI. So same UTI will remain throughout its life. But when it is novated, again, this example I'll take so that for better clarity. So the trade has happened between two counterparties, A and B, on a bilateral basis. At that time, the trade has not been cleared by a CCP. At that time, what happens is that till that time, that trade has to be reported. So a UTI has to be generated. So that will have a UTI where it will say that A is the buyer, B is the seller. But as soon as it gets novated, so novated where a CCP interposes in between, the counterparty changes, right? So counterparty now from B it becomes CCP. Similarly for B it becomes CCP. So the counterparty itself changes. So the trade undergoes a fundamental change there. So there then new UTI is required because the earlier one is no longer valid now. So that is why novation, and this novation can happen even otherwise. Suppose not only in all cases where CCP is required, even otherwise that novation can happen. Suppose a trade between A and B, A wants to exit that trade and C wants to come that one. That also happens, and that also is a common practice in market. So there also in that case, because the basic constitution of that trade has changed, the counterparties to that trade has changed, the risk has changed. That is why a new UTI is required for such purposes. So these are some of the directions which have been very thoughtfully incorporated in the directions, and that's how the whole direction is in place. Next, please. Yeah. So net, if we have to summarize, one transaction, one identifier. So that is the basic and fundamental tenet. It's a global standard. So one UTI, if a number is present in India for a particular trade, it should not be used anywhere across the globe. And how it is ensured by that logic, if you can, think through. So it always starts with the LEI of the issuer. So that along with other numbers, it makes it completely unique. That has to be ensured, because that is the fundamental essence of this whole UTI generation. Clear ownership, so that there is no ambiguity. One entity is responsible to generate UTI. So that is why a waterfall structure has been given, so that if that structure is not there, next one should be there. There has to be a provision, and ultimately, if nothing is there, there has to be last fallback, which in India's case will be CCIL TR. And life cycle aware, that means amendment, same UTI. Novation, you need to create a new UTI. So these are some of the fundamental aspects of UTI as per master directions. So this is a master direction RBI has actually created to consolidate the earlier directions. So LEI has been issued, mandate for LEI has been issued by RBI under various directions. Similarly, SEBI has issued direction. So RBI UTI directions came into effect earlier, but now both, because these are both the unique identifiers, one is for the entity, one is for the transaction. This has been created in one master direction for ease of reference for anyone. So that's how this whole concept of UTI is there, and that's how we will be implementing it. I am happy to take any question on either LEI or UTI, because we have been operating this thing. CCIL, again, just to give you a small, CCIL is a qualified central counterparty, and we are the only QCCP for government security, money market, forex, and derivative transactions. We are regulated by Reserve Bank of India. LEIL is a wholly owned subsidiary of CCIL, which is regulated by RBI under PSS Act. As Vikas mentioned, any LOU which is present in India, it has to be regulated by or approved by RBI under PSS Act. So we are regulated there. And we were the first one to, amongst the first one to get accredited by GLEIF. We have issued till now more than 1,50,000 around. More than 10 lakhs, 10 years of experience. And again, LEI, the very crucial part is the quality of data, what data we capture, because ultimately LEI is a number, but it represents a lot of underlying metadata, which is very important for anyone to verify and validate. So we are, we focus quite a lot on data quality, and that's why our data quality standards are very high, and this has been recognized. And our aim is to again run it as a public infrastructure. We don't want to really we don't want to run it for a profit motive. So whatever economies of scale we achieve, we pass on the benefits to the ultimate entities, so that the ultimate cost for them gets reduced. So that is our motto, and that's how we have been working. Now happy to take any questions if you have.
Participants are welcome to drop their questions in the chat box, or I think we have one question. Faisal has a question. Who is the LOU in India? Is that mandatory or optional?
Yeah, LEIL is a LOU. Yeah, Legal Entity Identifier India Limited is an LOU in India, and we are authorized by Reserve Bank of India under PSS Act. So LEI obtaining LEI is mandatory if that entity is doing some kind of transactions, like as Vikas mentioned, OTC derivative transactions, then your non-derivative transactions like government security, money market, forex transaction beyond 1 million. Then if you have a credit exposure of 5 crores and above, if you are making RTGS payment of 50 crores and above, those kind of mandates are there, and where their LEI is mandatory.
Just to add on to the question, because I think he has asked, is from Bank of Indonesia. So we are probably particularly covering one aspect of the mandate, which is around the OTC derivatives here, for which LEI is mandatory. But there are other aspects as well within the financial domain, in which LEI has also been mandated, which includes the LEI for borrowers above a threshold of 5 CR INR, and also for the threshold above 50 crores. When it comes to domestic and cross-border, LEI is mandatory and part of the messaging structure when it comes to domestic markets. So there are also various mandates in the financial market, and there's one more mandate which has been issued by SEBI, which mandates LEI for foreign portfolio investor. So this is just additional information.
Yeah, even insurance regulatory authorities, IRDAI,
Yes.
they have also mandated
They
for
have
the
also.
corporate borrowers. Yes.
True.
If there are any more questions, please either you can raise your hand or unmute yourself and speak, please. Or drop them in the chat box as requested before. I think Sonia is asking, what if the entity gets lapsed?
Yeah, so again, Vikas, shall I answer this question?
Yeah, please go ahead.
Yeah. So again, if the LEI should be valid, that is what RBI direction says, even other directions. So the whole idea, Sonia, is that the underlying data remains current. That is why this 1 year renewal is mentioned. And if the LEI becomes lapsed after 1 year, you can still get it renewed after that period whenever it is required. But as per RBI directions, if suppose you are a borrower who has obtained credit exposure from a bank, then your the exposure will not be renewed by the bank. If you are reporting, if you are doing OTC derivative transactions, forex forward, interest rate swap, etc., banks will not undertake that transaction. So it's in the interest of the entity to get it renewed timely. So that is how on the whole mandate or the regulatory structure in India is.
So from the OTC standpoint, if there's no LEI or the LEI is lapsed or not valid as per the rules and regulation prescribed, the participant is not allowed to participate in the derivative transactions. Similarly, like Arunji mentioned, the advances or the credit is not renewed, or the borrowing is not renewed by the banks. Yeah.
And if the entity, Sonia has asked, if the entity is refusing to renew, if you are a bank, the option is that you don't transact with him. Otherwise, it's not on the right side of the
Yeah.
directions, regulatory direction.
So there's one more question: is LEI mandatory for corporates getting foreign investor funding or doing foreign fund transfer? So Satish, answering to your question, so for cross-border transaction, there is a mandate by RBI which says that any transaction which is beyond 50 crore, so 50 crore INR, if your funding is above 50 crore, it is definite that LEI is needed. That cross-border transaction cannot happen, and there's no exception for that. If it is within 50 CR, I think then probably, but I think on a voluntary basis, a lot of banks from a due diligence standpoint, they are voluntarily asking every foreign transaction to have LEI obtained and reported. So it is not only, so probably if you look at Indian ecosystem, LEI is considered as one of the risk mitigating tools, a compliance checkbox kind of a thing. So not strictly, a lot of banks are probably considering it as a proactive measure wherein they are proactively asking for LEI even if it is not beyond the threshold limit. So it is, so if client denies, you need to probably, being a banker or an intermediary in between, this is your responsibility to make them aware that it does not cost much. It is just is a compliance requirement, and is not only applicable to India, but there are many for other foreign jurisdictions wherein LEI has been mandated. It is not only India which has mandated it. So there are provisions in Europe, there are provisions and regulations in US, China, many countries
Across the globe
mandate
most.
LEI in different sectors. Yes. MiFID 2 in Europe mandates LEI.
There's another question from Ilham. What about the counterparties that don't have an LEI, such as individual corporations?
Right. So, Ellen, so as per the provisions, so individuals cannot have LEI. So Arun Pandey, I cannot have LEI in my name. If I'm running a business, then I can obtain an LEI. So in such cases, suppose a individual, suppose a non-resident, they are doing a power transaction, suppose, and it has to be reported. In that case, LEI will not be required. So TR accepts without that LEI, and that is the only exception which is there. So individuals cannot have LEI as per the current scheme of things.
I think they are asking on the cost. So would you like to take that question, Arun?
So cost.
What is the cost of obtaining an LEI?
Yeah, so cost as of now, in India we are, we have multiple options. The simplest 1 year cost of LEI issuance is 3,500. So roughly how many dollars you can calculate? It's very few dollars. Yeah.
So $40.
Yeah, $40.
So average is.
And renewal is again
$40.
much lesser than that one. So yeah, that's how.
It's not one time; it is recurring. I think he also asked a sub question there. So it is
Yeah,
not only
renewal
one
is
time; it has to be renewed.
renewal. You have to pay for that one, but that is much lesser than this one. So any other question?
Any
Is
other?
there any way to let client know importance of for LEI code? So we kind of publicly announce, and we also publicize at so many places. Even banks and financial institutions, they are also, because of the RBI mandate and other regulators mandate, they are also kind of letting know. In case our website, it's a very rich source of information if that can be there. If you have any other idea how do we really make it popular and let all the clients know, you are requested to please get in touch with us. We are more than happy to collaborate with you.
Sonia, answering to your question, if your client is a Indian client, I think it would be meaningful to draw his attention or our attention to all the mandates issued by RBI, SEBI, and regulators. If it is a foreign client, or probably from a business standpoint, you want to explain the benefit. Arunji, I think already outlined that LEI has been considered as a global passport for SMEs and corporates, because it is not only about the mandates issued by the various regulators, it is also about having a single syntax of identifier which is easily interoperable. So, although we are talking specifically on the topic of LEI and OTC, but there are several discussions which here and there which are probably thinking of leveraging the benefit of LEI beyond financial markets. So LEI can also be used as an attribute in cross-border payments, because that this is something which is commonly used across global markets. So you have to probably make the client understand from that standpoint, and I think yeah.
Yeah, even Swift standards ISO 2022, they have now
Yes.
enabled that LEI number. So, I mean, think of it. So, LEI, if you are doing a cross-border transactions, all those world checks, OFAC, all those filters, etc., it takes a lot of time. Suppose if it is there. So,
Yeah,
instead of
and
that, your name and the name of the entity and the address, etc., everything gets replaced by this LEI number, one number, and it's a digital. So, verifying, etc., it becomes very easy. So that's how the world is moving. Probably, I mean, we need also we also have a responsibility to let all other entities know, so that this becomes useful. So Sonia, yeah. So I'll share my email. Anushka, can you share my email, or shall I share here on the chat only?
That's
Because
whatever you're, however you're comfortable. I'll actually drop my email address over here.
yeah,
If anyone wants any information, they can get in touch with me on this email.
yeah, that would be useful. So Sonia, please get in touch. I'll immediately.
I think there's one more question. Is there a cost
Yes.
attached to UTI?
No, there's no cost for UTI. So UTI, because TR, it's a part of your TR reporting only. So there's no separate cost or nothing. I mean, no. So in most of the cases, CCIL TR would be generating that number. It's all as a part of the reporting structure only. If you are reporting anyway, when a bank or financial institution, they are reporting, they have to report with UTI if they want to report. It's all, I mean, okay.
There is, I think that we can take one last question. We just have
Yes.
2 minutes on the clock. It's from Faisal. In the context of I'm sorry. In the context of wholesale CBDCs and tokenized, I'm so sorry.
Yeah, tokenized interbank. I can read. I can read. So tokenized interbank settlements. Does it still need BLA? So Faisal, you see, I mean, no, these are two distinct things. So not everything will be tokenized immediately. Correct. CBDC is one aspect of the whole payment system or ecosystem which is getting generated. But ultimately, VLEI, if you see, VLEI gives the authorized signatory a digital identity for any transaction. So any not all transactions, probably everything will move to the smart contract or the DLT. So at that time, probably, I mean, for those CBDC use cases or tokenized interbank settlements, it may not require for atomic settlement. But ultimately, who is initiating the transaction, whether that person is having authority to act on the entity's behalf or not, this is very critical question in this today's digital world, where everything is, the transactions are happening digitally and there is no physical or any kind of document verification. In such a case, VLEI, we feel, is a very natural extension of LEI. So LEI gives the entity an identity. VLEI gives the authorized signatory an identity. So we believe both are very, very essential. But again, I mean, if you have any other thoughts, happy to discuss. But this we feel should be, I mean, actually promoted by everyone across the globe as a digital identity, because we see lot of use cases getting developed over this VLEI.
Just to add, I think as rightly pointed out, so VLEI is a different topic altogether, but probably I will say it is evolving topic. It is a digital counterpart of LEI. It is a verifiable credential which is built on the top of an LEI. So the underlying identifier is still the LEI, but what VLEI does distinguishly in comparison to LEI is it identifies that it holds the capability to identify a specific person representing that legal entity. So from a wholesale CBDC standpoint, so I'm not sure whether there is a applicability, but what I can assure you is that VLEI has the capacity and capability to provide delegated authority in a seamless way. And at the same time, wherever there is a requirement to have permissioning and delegation when it comes to blockchaining, I think VLEI can be used because it is kind of a verifiable credential which can be embedded into the life cycle of that offering. So it is a very broad, I'll say, concept. Currently, there's nothing concrete is happening when it comes to VLEI and wholesale CBDC, but it can be looked at, yeah, sure.
I think that we're at time. There might be more questions. If in case there are, please find my email ID in the chat box. You can reach out to me and I will share them with the speakers. I would like to take a moment to thank Vikas and Arun for such an insightful session. There was clear enthusiasm from the audience as well. So thank you so much for your time today and sharing your insights with everyone. I'd like to thank the audience for joining in for a post-lunch session. Thank you very much. And please follow us on LinkedIn. And apart from our members, please follow us on LinkedIn for more such sessions and initiatives in the fintech and payments ecosystem. Thank you so much, everyone, for joining.
Thank you. Thank you, everyone.
Thank you.
Thank you very much.